I wanted to show you the difference between the calculations of MACD in different ways. Now, these are basically simple, exponential, weighted, and smoothed. And if you take a look right here, the standard MACD is to take a trade when you get a cross of the moving average. Now these are pretty close, but a lot of people also tend to use the histogram to trade. And look at the difference in the way the histogram works. Now when there's a big move, it's pretty standard, okay? They're pretty close together. As you get a retracement, they start to look different. Notice how this one drops off quicker. This is the exponential, as you would expect. This is the standard. This is the smooth, which tends to stay in longer, actually, and keep you out of getting out of the trade. Actually, if you're going to get out when the histogram starts to turn. You can also notice down here the big difference in the way the indicator looks. All right, you don't get a change till way over here. Here you got to go short here. Earlier, some of these are delayed significantly, so just remember that. I'm going to stop this and show you another example. Now the MACD is not very effective when the price is very smooth, all right? But when it does jump up and then jump down again, you can again see the significant difference in the way the moving average of the MACD, which is a blue line, the red line, works differently. You can see different turning times, all kinds of different things. So this is one of the reasons that the MACD is not nearly as effective as a trading tool as a lot of people think. I'm going to show you the other half of how the MACD settings work. Now this is essentially the same chart, only we have different settings for the MACD. We have the 12-26-9, the 3-10-16, popularized by a lot of day traders, Linda Raschke, for example. We have one that I developed called the 7-28-7, and here's another one, which is the 5-35-5, popularized by Bill Williams. And as you can see, the turning points are all different. Here is late with the standard one. Here is much earlier with the 320 or the 3-10-16. Here's the one that I basically developed over time, and here's another one with another long delay. Now I'm going to move to a different part of the chart. Now here, when we have a flat market, the MACD is essentially worthless. You could go up and down, and every time you have a cross, nothing would work. It just doesn't work, period. When you have a much bigger run up or run down, if you will, you can see that everything looks significantly different the way these settings are. So this is one of the reasons that while the MACD was popularized and a lot of beginners use this indicator, it does not work nearly as well as some other indicators we're going to cover. So this is Bill McCready for Futures Trading Secrets.